All right. What's up, traders? What's up, tycoons? We're going to break down ICP today. Okay. We're looking at that one on the daily chart. This actually was a viewer request. So if you have any requests of your own, you want to see your own ticker, your own cryptocurrency in the next video, all you have to do is comment down below. I'll be happy to get to it as soon as I can. In my last video, I gave you guys the main level to watch. Okay. It was this support level here. Right. And I said, once we break below this level, I gave a price target to the downside, which is right at about 3.669. If we take a look, we did recently hit that level and we kind of bottomed out there. All right. We found some nice support there. So I'm going to show you guys in this video how you can actually use the fibs not only to get bearish price targets or, help you predict price targets to the upside or the downside. But I'm actually going to show you one of the main things that I really use it for, which is for identifying trends and spotting trend continuations. So in order to do so, what you do is you take the fib tool over here, all right, and you put it to where you are looking at the 61.8% level, the 50% level, and the 38.2% level. So just to give you guys a visualization, right, you would click it here, all right, you'd connect this swing high up here, all right, down to your swing low, which is right here, all right, and you just connect them together. And I already have these three selected, but what you would do is, I didn't mean to delete that actually, you would come in here and you would just hit the settings button. All right. And it gives you all these different numbers. You would unclick all of them except the 0.5, the 0.618, and the 0.382. And I like to make them yellow just so that it's basically like caution. Okay. Because I know I need to be very cautious going long at these levels when we're looking at a possible trend continuation to the downside. It's no secret it's been a bear market. And that, we've been making moves to the downside, and the downside trend has pretty much been the overwhelming trend so far, especially in the year of 2021. So what it does is it gives you the three main levels to watch for, because nothing moves in a straight line to the downside. What it does is it comes down, it has a healthy retracement, and then if you get a rejection at the 38.2, the 50%, or the 61.8, then you get your trend continuation, right? So we come down and look at where we find resistance right at the 38.2 and continue the downtrend. Okay. And then we just do this, repeat the same process over and over again. And we see that it's just very valid, right? We have our swing high right here connected to our swing low. We come down, we get a rejection this time at our 50% retracement level, ultimately before continuing the downtrend, right? And again, we're just repeating the process, doing this again and again. All right, now we're connecting this swing high down to this swing low down here. So we have this move down, we get a retracement to the upside, and then this time we get rejected at the 61.8% level. So from a learning perspective, this is a really, really great example of why it's these three levels. You never know which level it's going to be. In this one, we got rejected at the first level, the 38.2. And this one, we got rejected at the second level, the 50%, right? And this one here, we got rejected at the third level, the 61.8% retracement level. So now that we have that weapon at our disposal, okay, because that's what all of these strategies are, is they are weapons at your disposal that you can use to give yourself an edge in the battlefield, in the war that is trading and investing. Okay, you need to have as many weapons at your disposal, and really start to learn how to use these weapons properly to give yourself the best advantage and chances of winning. All right. So now that we've got that out the way, all right, what we've done recently is we've taken our swing high, connected it down here to our swing low. We see we have a downtrend, we have a retracement. We've already come up very close to the 50% retracement level. So there's a high likelihood that we could, get rejected here and continue the downtrend, right? Today, specifically, we actually rejected at the 38.2 and we're moving downwards. But, we can continue heading upwards, all right? And the 61.8% level would be the most, one to pay the most attention to. It's also known as the golden ratio, the 61.8%. These fibs, the fib golden ratio exists all throughout the stock market, all throughout the cryptocurrency market, and throughout nature and life itself, right? It's very powerful numbers. And, believe it or not, most trading is done by algos. About 70% of trading is done by algorithms. So it's good to start using some of the formulas and use some of the math that the algos are using to help give yourself that edge. All right. Now, the second thing we're going to use to give ourselves an edge is the relative strength index. Okay. That's what this is down here. And you're probably wondering what all of these circles are for. Well, I want you guys to take a look, right? So we have a low here, we have a lower low here, and from here to here is still a lower low, right? Now, this is kind of like an equal low at these points, but what we're going to do now is look at our relative strength index at these points. So we have a low here, right over here. Then we actually go up just a very tiny bit. So we're seeing a slight divergence, right? What we're seeing now is that the token is going lower in price and the relative strength index is not going lower in price. It's actually creeping up just a little bit. This is a slight bullish divergence. It's an indicator you may see some bullish activity in the future, right? Um, and then from here to here, what we're seeing is that we're actually in a stronger uptrend, right? So again, we're building more relative strength. And overall, the token has been in a downtrend, right? So the token is doing this, getting lower in price. As the token gets lower in price, the strength of the token should be dropping with it. But that's not the case in this instance. We're actually seeing some bullish divergence. And if you use this as an entry or you use this as an entry, either one of those bullish divergences, which, it's really about the same level, we can see that that was actually a 30% rally. All right. Now, currently, you'd be up about 20% if you got in. This is what's known as a buy signal, right? No signal is 100% guaranteed, but you can, combine some things together to really help yourself give you an edge. And in this case, we're using bullish divergence to help give ourselves an edge. And we see that, we got the bullish pop. And now we know that this is not necessarily the best time to go long. Reason being is that this was the time to go long right in here because we had bullish divergence. We had a sharp move to the downside. Most likely, after that move, we're going to get a retracement to a healthy retracement level of the 38.2, the 50%, or the 61.8%. And then if we use that as an entry, we can use these as exits, right? We can come in here and say, okay, well, we hit the 38.2. I'm going to go ahead and just take profit. Or, hey, we came up here close to the 50%. We didn't hold. So I'm going to go ahead and take profit. Your risk to reward is a lot more skewed when you're entering right at your major retracement levels, right? Because what if we do come up to the 61.8% level and you're using that as a bullish price target? Well, if we take a look at and just go ahead and use our tool over here for let's just say a short or a long position, right? What we see is that if we go long here, all right, our target compared to our stop loss is relatively the same. I mean, really the risk to the downside is going to outweigh the risk of the profits a lot more. All right. It's pretty split even here, almost 1-to-1, but you really don't want a 1-to-1 ratio. Okay, because that's not very good. And you're not going to have much success with that because for every trade you win and every trade you lose, you could just end up keep losing and you don't really have anything to offset your losses, right? But if you're coming here and you're entering down here, okay, so we see our bottom here, and let's say we get an entry up in here, and we have a stop loss just below, all right, just below our most recent lows. So that way, if they try to draw liquidity in the market and bring it back down to these lows to push it back up higher, we won't get stopped out, right? And that looks a lot better. Okay. Your risk to reward ratio right here is over 4. So now you have that room to come in here and make the decision. Okay, well, even if we don't come up and hit all the way up to my perfect target, I can still take profit in through here, right? Even this is still a much better risk to reward ratio. This is about a 2-to-1 risk to reward ratio. So the higher the ratio can get, right? You want to be above 2 at least, but preferably you want to be at 3 to 4. Okay, that's going to give you much more room to that way, if you have a 3 or a 4 risk to reward ratio, you can lose 1 or 2 trades. And ultimately, if you hit your, third trade, that is going to outweigh the smaller losses, right? You're going to have a much larger win that's going to outweigh your smaller losses. All right. So that's it for today's video. Smash the like button, subscribe to the channel if you're new. Don't forget I do viewer requests every week. So if you want to see your video or your ticker, your cryptocurrency in the next video, all you have to do is subscribe to the channel and comment down below on what ticker it is, and I'll be happy to chart it up and make a video on it as soon as I can.